Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, we've listed down all the top stocks that you need to track, but let's get a little bit more fundamental analysis going. We have Amnish Aggarwal, the Director Institutional at Prabhudas Lilladher, who joins us, PL Capital, who joins us. Hi, Amnish. Thanks a lot for joining in. Amnish, I wanted to ask you about a couple of companies that came in with their results towards the end of trade. One is UltraTech Cement, the other one is TVS Motors. Your reading of those numbers, for UltraTech, everything was pretty much okay. Barring in the near term, they're talking about some pain, and that's because of the intense heat. Otherwise, things were okay. And on TVS Motors, the stock saw a sharp spike. But, post-market hours, we got to understand that, in fact, there is a one-off in terms of the PLI that was accounted for. Your take on both these two?
Yeah. Hi, Nigel.
Hi.
You see, if you look at, say, UltraTech, you see, these are weather-related conditions. They are, I think, all temporary, and we had very intense heat waves even last year. And the main thing here is that they are looking at expanding their margins over the next couple of years in some of the recent acquisitions, and they are banking a lot on the operational efficiencies which might come from renewable and other segments. So UltraTech, I think the numbers look reasonably good. Is there a very big upside in the near term? The answer is no. But UltraTech remains one of the best stock, or rather the best stock it's like a portfolio stock in the cement space. If you want to, you can say, play the India, you can say the entire infra story, the entire, you can say the housing story and all. UltraTech is more like a portfolio stock, maximum capacity, most efficient player. So from that angle, the company continues to look reasonably good. Now, when it comes to your TVS Motors, you see TVS Motors, I think in the entire two-wheeler space, one of the larger companies, it is growing best in terms of volume. This quarter, there was a PLI gain due to which there was a prop-up in terms of margins. But now if you look at the numbers, the stock currently is also trading at something like 27, 28 times on FY27 earnings. So that has been an issue with TVS Motors, that despite it being, you can say, the company growing at the fastest pace, and in terms of EV penetration also, or the share gain also, it is doing well. It is on, I think the issue is only with regards to valuation. Otherwise, in terms of pure volumes, product launches, and other factors, I think TVS continues to be a very decent player.
Okay. Got that. Amnish, hi, morning. Just want to discuss some of these mid-cap tech earnings that have come. First source, there's some growth there. I think 2% constant currency top-line growth, but Hexaware seems to have faltered. What are you liking in mid-cap tech? Of course, Persistent was, I think till now, Persistent has been best in class in terms of tier 2 technology, growth intact. But what do you like, if anything?
You see, tech as a space is not doing well. Although you can say the TCVs of many companies, they are not showing any big issue. But the conversion is not happening at the current juncture. Whether it is, you can say, larger companies, or whether you look at the smaller companies, I don't see a probability of any acceleration in the growth rates happening over the next 3 to 6 months at least, till the time this entire uncertainty around the tariffs goes first. And secondly, even in terms of, say, you look at Europe and all this, so they have been reeling under some sort of a recession from quite some time. So I think Persistent is a stock actually which has been doing well. And this is I would say, in the mid-cap space, this seems to be the best placed company. But having said that, if you look at the valuations of Persistent, they are, I would say, they are cut above the rest. So even the larger stocks where they are trading at, say, something like today, anywhere between 18 to 20, 21 times, Persistent is trading at a significant premium. But as such, I think at this point of time, it is more, you can say, the short covering and all. But otherwise, I think tech is a space which will show pressure on numbers even for the coming 1 or 2 quarters.
One more word since you're talking about tech. What about Coforge? That's Sabre. That is the global listed company. It was up 15% overnight because they're looking at, deleveraging their balance sheet. And the fear was that, their balance sheet wasn't in good order. That's why when they did a collaboration with Coforge for around $1.5 billion, the street was a little bit skeptical. Now, if their balance sheet is in better shape, this could be a bit of a fillip for Coforge, though it's not, in fact, very, very cheap. Your view on the stock, because you have that news flow, then you have them selling some stake in one of their subsidiaries, and you have their results early next week. Your take?
Coforge, I would say it's an exception, and the stock was actually languishing at a low level. But now, if you can say if there is some deleveraging happening in one of the companies, which is you can say related to them. And I think the news flow around Coforge is likely to be on the positive side. And it all will depend upon what they actually, you can say, declare in their numbers in terms of, say, your orders or in terms of the outlook. But the news flow around Coforge has been, I would say, reasonably positive, and that is one reason the stock has also shown a significant uptick in line with some of the other stocks.
Okay. All right. Amnish, got it. Thank you for some of those inputs.
Amnish Aggarwal has, of course, been sort of speaking with us with his perspective, with his thoughts. Amnish, thank you for waiting. I just wanted to get a quick sense on this entire Apple news flow, which is a big one for the industry, really. But from a listed perspective, do you think there are any opportunities at all? The news that for all the phones, iPhones, which are going to be sold in the US, I mean, the company is saying that they want to make those phones out of India.
You see, if that happens, I think it could be actually beneficial for India, not directly but indirectly, because we are currently in the process of setting up the entire system. And it is, you see, when it comes to purely assembling the phones, there is very limited value addition which happens over here. But when it comes to looking at the, you can say on the ancillary side, there's a lot of scope then to set up the infrastructure for the semiconductor, for other components, etc., which go into that. And I think the major, I would say, gains will lie over there. Okay, so I think it is a positive news more for the EMS companies or the companies which can then collaborate with Apple and they start manufacturing the components over here.
I mean, stocks like Dixon, etc., typically perk up when you have this Apple-related news flow. But the point is, so far, from the listed universe, nobody is part of that sort of ecosystem, that value chain with regards to Apple. I mean, Dixon, etc., of course, they've got the entire Android phones on there, and they make them for all the bigger sort of Android brands.
You know, but Prashant, maybe right now I've seen that report, but maybe it's easier said than done, because unless there is a rollback in the US administration sort of thinking, iPhones were one of the things. I mean, these iconic items, right? iPhones, the motorcycles, the bourbon whiskey. There was constant chatter about why can't these phones be made in the US. I mean, logic probably is a different argument. But let's see if they can be allowed to ship the entire manufacturing going into the future to a country, including, of course, India.
You know, I was told that there is apparently right now a 20-25% difference between the cost of production between China and India. And what happens is that if these tariffs in China go up more than what they go up in India, it makes more sense. That seems to be the motivation. Now, of course, if they want everything to be made in the US, that is, I mean, that is, of course, far tougher than moving it out of China to India.
Yeah.
I mean, the cost will go up, I don't know how many.
Dramatically,
Dramatically.
Yeah, absolutely.
But, you know, just one word on this. A couple of leading EMS players, they have said that their phones have been ringing non-stop. So inquiries have gone up dramatically. We'll try to quiz them when they come on the channel, but I know, you know, that's the word that's coming.
Absolutely, and even I remember our conversation with Dixon, very small, minuscule portion, but they do some work with not Apple as of now, but you know, with the different clients in the US. Anyway, the pre-open, by the way, has started, so let's take stock of it. About 30 points higher. That's what we're getting in the pre-open. Let's wait for the rate on IndusInd Bank to settle. Maybe it's right now in pre-open is showing down 9%. The thing is, this is not entirely unknown. Like we've been saying, Ritu was pointing this out, that there will be other senior level exits. And that's exactly what happened yesterday. But for what it's worth, I don't know if Amnish is still with us. Amnish, if you can hear me. Very quick last call. IndusInd Bank, 7:55 now after this news.
You see, IndusInd Bank is getting spate of bad news one after the another. First it was MFI, then this year entire, you can say, losses which were there in their derivatives and treasury. So I think one thing is very clear, that there is going to be a very, very big change as far as the entire, you can say, the top management of IndusInd Bank is concerned. And now the main thing is, if you can say your deputy CEO or the person of that stature goes, it means that for the top two jobs, IndusInd Bank will have to now look outward for a candidate. But having said that, if you look at the past history of IndusInd Bank over the last, say, 7-8 years, then it is the second time it is happening, and every time you see stock gets better to even 500, 600 rupees. But inherently, I would say the business model is not bad. they need to put checks and balances in place. And I think over a period of time, the stock has recovered in the past also. So I think it might have you can say some kind of an initial reaction, but I think if they put their house in order, if they tighten their, or you can say compliances and all you can say regulatory stuff, I think that this could be a stock to watch out for, because the MFI trouble for all the banks is any which way is going to be over, say, in another couple of quarters. So yes, it's a high risk bet at this point of time, but definitely I think all these changes are expected and more might happen over the next few months.
And the stock, by the way, is already recovering, and that's the point that Amnish, I think, is also alluding to. I mean, if they're cleaning house with a fresh new set of management is going to come in, and it's already well advertised as we've reported, others, of course, reported after us as well, then I don't know if this, the 9% cut's gone. I don't know if even if this 5% cut will remain, and it should come up.